Welcome to our Superstonk AMA. We have Paul Conn, the president of Global Capital Markets in Computershare. Thank you so much for coming for your third AMA with us. I'll just start with the questions. We asked you recently, can a broker initiate a transfer of GME shares out of an IC shareholder account without their permission? Your answer was no. A broker should only initiate a transfer of shares where authorized by its client. A broker must provide, on the electronic transfer request, the transfer agent with the shareholder's registration details, the number of shares being transferred, and unique shareholder reference number to initiate the transfer. Details only the shareholder should know. Can you expand on what the unique shareholder reference number is?
Of course. So, Platt, firstly, thank you for having me back on your stream. I'm sorry, I'm suffering a little bit of a cold at the moment, so if I sound a little bit froggy, I apologize for that. So firstly, it's great to be back and engaging with you all on questions you have about these particular matters. So to your question, the unique shareholder reference number, or the holder identification number, is the number which is shown on the DRS statement. That is a private number for each individual shareholder. You should think about it as a key, and that's the key that is needed to access your account on our register. So it's a really vital piece of information. A person may know your name, they may know your address, they won't necessarily know what securities you hold on our registers because that's private information. But the key, the unique shareholder reference number or the holder identification number, is what you need to provide to a broker to allow that broker or bank to access your holding. Now, without that number, the bank or broker will not be able to access the account on our, or the holding on our register. So hopefully that gives you a feel for. I'm happy to obviously take further questions on that if you have them.
Okay, well, that makes sense. Will the current limit sell price rise as the stock price rises, and how will that work?
Okay, so that's a really good question. Well, they're all good questions that come from your audience. I should start with saying that, but it's a particularly relevant question, and we know it's a topic which generated a lot of interest when we were required to make some changes earlier in the year. So here we're talking about the limit order price as opposed to the total consideration. I can come back to that later, but on the limit order price, we were required to bring that down to $3,500, $3,500. That at this moment in time is a fixed limit across all securities across our book. We will be moving it to a dynamic order limit price, and I expect we'll have that in place before the end of Q1 next year. So that's where we stand on that. I know there's been a lot of speculation about how that works. Your listeners will be interested in is, how does it move as the price moves? And I think the limit we have at the moment, we're comfortable with that. At this moment in time, we do recognize the need that people want dynamic pricing. So as prices go up and down, the cap moves up and down, and we will get that implemented, but it'll be closer to the end of Q1 before we have that. But at the moment, it's a firm limit. Market orders above that price can be done at any time. So it's not as if people are being locked out of the market. It's not as if people will be forced to sell at that particular price. I've seen some discussion about that. So hopefully this clears up how that works, at least at the moment, and how we intend it to work going forward.
Okay. Dynamic pricing, does that mean it'll go up by a percentage based on the price of the stock?
That would be our intention, yes.
Okay, that makes sense.
And that would bring it more into line with how I think, broking limits work today.
Yeah, Fidelity does it that way. So
yeah, it's interesting. Obviously, we got a lot of feedback about the $3,500 limit, but I'm not sure many people could put $3,500 in today for the securities that they're interested in. So it generated a lot of a lot of discussion and chatter, and we're listening and conscious of the feedback, and we know ultimately we need to move to a more dynamic, at least where it moves up once a day, it will move up and down, and we should be able to set a tolerance for the percentage level that it can increase.
Okay, all right, good to know. In our first AMA, you informed us you were looking at what you can do to raise the selling limits. Could you give us an update on that?
Okay, so we did update. There was a lot of discussion about the total value of an order, and there was a lot of discussion around firstly needing to give us written instructions. There'd be $1 million value cap. We're not talking about order, we're not talking about price limits here, we're talking about total value. And we listened to that, and I think on subsequent AMAs we confirmed that we increased that for 2 securities to a total value of $10 million per order that comes through the web, with the ability to put sequential orders through. So we believe that should have relieved a lot of the concern that was around at that point in time. So you can do a number of back-to-back orders, and the value of each order for the 2 securities that people seem to be most interested in set at $10 million. For almost all other securities, the value cap is currently set at $2 million.
Okay. Can people request the verification code when setting up an account be sent to an email address rather than a mailing address?
Unfortunately, they can't at the moment, and this is all to do with the focus that we apply to security. If the DRS holding is, for example, recorded with a person's tax ID number, so we're talking really about US holders here, they will later be able to go on to Investor Center and verify who they are by using that tax ID. For those parties that are outside the US, we're still requiring the authentication code to be mailed. We're still looking at other ways to automate that process. We're still aware of feedback that people want that to be even further streamlined.
For sure. If we set up a TOD beneficiary to our account, how does that work? And is there any difference for international investors?
Right. So yes, there's a big difference. A TOD is transfer on death. That is something that applies under US law for US persons. So really, to set a transfer on death instruction, your account needs to be registered in the US. There are, each country has its own laws about how property is transferred to beneficiaries, but the TOD is very much a US specific issue. It's not a technology issue. It's a kind of law of the lands issue.
Okay. How many bank accounts can each Computershare account have? And the same question for international investors.
Okay, so that's a fairly straightforward answer. It's 1. You need to have a US dollar denominated account facility in order to purchase through us. So that can operate whether you're a US person or a non-US person. You need to be able to fund us in US dollars. We can dispatch considerations for sales in US dollars by way of a check, or we can wire in non-US dollars through a range of currencies. A wire could in fact be to a different account, but typically you're just holding one account with the facility that you have with Computershare.
When will European investors be able to easily deposit funds from their European bank accounts?
Yeah, that's a good question, and it's really a regulatory issue that currently we can only take US dollars from US denominated bank facilities. So that's US banks and banks outside the US that have US dollar facilities that can trigger ACH payments. So we really need to kind of look at how we expand that. It's really a regulatory issue that we need to be thinking through as we move forward, but it's not available at the moment, and I'm not sure it will be available, anytime soon. But it's something that we can see there is some demand for. So it's kind of on our working list.
Could you talk about which processes online require multi-factor authentication?
Yes, yep, be very happy to do that. Clearly, the two-factor authentication, multi-factor authentication was one of the areas where there was some really intense feedback, and we understand why. I think the the common piece of feedback we had was with Investor Center, please put a two-factor or multi-factor authentication process in place. I'm pleased to say within the next couple of weeks that will roll out for our US Investor Center, and it will progressively roll out for parties outside the US over the coming weeks and months as we're able to identify the particular carriers for the text messaging process that we will use. So Investor Center will move to a two-factor authentication process, and I hope that your listeners will appreciate that. We have listened long and hard, and be happy to be releasing that. So you will start to see that come on stream over the coming weeks.
Nice. Is that to log in online, or
that will be to log in every time you go on to Investor Center? So you'll go on to Investor Center over the next few weeks. It will prompt you to say, would you like to opt in for a two-factor authentication? You'll say yes. It will send you put your mobile, your cell number into the system. It will send you a short code. You'll put the short code into the system, and once you do that, your account will be set as a two-factor authentication account. Then every time you come back to Investor Center, it will expect you to go through the same process to pick up that short code that we will text to you.
Nice. Okay, good to know.
So hopefully that's good news, and
that's great news.
Appreciate that. So it's there is some good news. We also have some quick access services online now, which people can trigger from their phones. So we're moving in the right direction. Hopefully your listeners will appreciate that.
Okay, so maybe this has to do with this question. What information can I access quickly for my account?
Well, that's really good. You'll be able to log into Investor Center. You'll be able to update your address. You'll be able to update your bank account details. By the end of Q1, I hope you'll be able to send us a very simple balance request through text, and we'll respond back through text to say what your balance is. So when your listeners go into the website, they'll be able to see what services they can use there, things like check replacements, order statements, and things like that. So there are a range of kind of microservices that are there, and text notifications is one of those services, and they're live now. But from the end of Q1, we'll also add this balance feature to it. So you can just ping us at any time, and we'll ping you back the balance. And hopefully that will give people some comfort that their securities are always being looked after. It's stuff that we take very, very seriously.
Yeah. So would someone have to, obviously they would have to set up their online account to be able to access the text messaging, right?
Yes. Yeah.
Okay.
Yeah. If people just click into the URL, they can go in. It's fairly straightforward. They can have a look through the different services, and they can see where they enroll for the text notifications.
Okay. Yeah, I get those every time shares get deposited in my account. So it's great to get a text, oh, your shares are all set. Yeah. How's electronic delivery moving along?
So e-delivery, it's been fascinating, really, because we went through the proxy season. We had a lot of electronic communications in place as a result of people either being part of a plan where we already had their email address on file, or they logged their email address with us, so we're able to communicate electronically. In across a couple of securities, I don't want to go into specifics, but we had tens of thousands of e-communications that were distributed really, really efficiently, and we saw votes coming back within 24, 48, 72 hours, and very, very high levels of engagement and feedback. So that was really great to see, and it proves that the communications, work well, and I think people responded to that. We'd like to see more of that.
Do you mean like voting for like shareholder votes for
Yeah,
meetings?
shareholder
Oh yeah,
voting.
we did that. Yeah, that was
Yeah,
like
we saw that.
because so I still have shares in various brokers too, but Computershare was the quickest one by far. It came days before the other ones, and I was able to vote right away, and everyone else was able to vote so easy. We had so many problems last year, so it was so nice to not have any problems.
Yeah, I'm pleased to hear you say that, and I monitor, and we look at some of the discussion that's going online. It was very clear that we had thousands and thousands of votes come back through the direct voting process before people were seeing their votes distributed through their brokerage position. So it was really pleasing to see.
Yep. Okay, so what security measures are in place to detect and deflect DDoS attacks that might occur on the website? And what compliance standards from a data security and integrity point of view does Computershare have to adhere to?
Okay, well, these are all good questions, and I think the most important question is to say that we take this particular area, very, very seriously, just like all organizations do these days. No one is immune to attacks, and DDoS is something that we all have to work with to protect our businesses and to protect the assets of our clients and their stakeholders, the shareholders. So we have an information security group. It's a global team. They're set up to protect the Computershare business. We spend millions of dollars per annum on this particular group so that we can protect the assets that we look after. So I don't really want to go into all the specifics of what we do and how we do it, but I think we can say that we're state of the art in terms of looking after these particular procedures and processes.
Okay, good. In terms of staffing or processes, how much has Computershare been affected by this global influx of investors wanting to be registered owners?
Well, again, it's been each time we engage, it's fascinating to see the uptake and the interest, and not just the discussion, but the action by investors to move to direct registered shareholdings, particularly through the DRS system. So whilst we've seen very large numbers of people do this, we do operate a business and platform with millions of shareholders in the US, and tens of millions of shareholders globally. So whilst this has been a very significant influx of new investors, only been a modest increase in overall shareholder numbers across our broad business. Obviously, in the particular securities that are of most interest to your listeners, we've seen some significant kick ups there, but in the overall scheme of things, it's a modest increase across our US business, and it's a small increase globally. Nonetheless, it's very, very important. Your listeners, I think, love to keep us engaged. Obviously we're learning a lot more. It's interesting to see different factions within this community debating different points, and it's just fascinating to see the online engagement and the hive mind at work. So we're responding as best we can. It's not our job to tell people how they should be registering their securities. We can't give financial advice. We provide services to companies and services to investors, and we're here just to respond to that. But yes, there has been a real increase, and it continues. Week by week, we see further increases in the numbers.
Have you had any media inquiries asking questions about GME investors?
Yeah, I mean, we do look from time to time. We get inquiries. There have been a number of online articles about areas, such as this, such as the increase in interest in direct registration. So we do get inquiries. We have an FAQ page, which is now quite extensive. We produced an animated video, and that's something we've shared as a resource to media for those who have some interest in this. So I think a lot of people are looking at it and still trying to get their minds around what it means, and whether the initiative that a number of investors have is kind of still underway, or whether this is yesterday's news or whether it's tomorrow's news, and it's not our job to judge what that is for them. But yeah, so we have had discussions, and there have been some articles written which you can all find by searching.
Mm-hmm. What's the largest percentage of a company you've ever seen direct registered?
Look, this is a really difficult question. I mean, when companies are private and they go public, 100% of their capital is direct registered, and as they become public, shares move into the street system, because the street system is what supports clearing and settlement of the public markets. I can't put a number on that. It really just it will fluctuate, and it's different market by market. So I'd rather just kind of leave it at that. It's not something we can control. We can only respond to people putting instructions through the system to decide where they want to hold their shares.
Okay. Could you explain the difference between a forward stock split and a stock split via dividend in terms of how they're distributed? Could you explain how a transfer agent distributes shares for a stock split via dividend versus how a broker would distribute these shares? And could you also tell us how a transfer agent distributes a forward stock split versus how a broker would?
Okay, well, that's a really it's a long it's a long question. It's a big question. So I'll try to break it down, because this is a complex area, and it's an area where clearly we've seen some activity, and we've seen a huge amount of online discussion about what it is and how the processes work. So a stock split and a stock split by way of dividend is really an issue for a company in terms of how they're structuring this. From a practical perspective, doesn't really make too much difference in terms of how many shares you held before the event and how many shares you held after the event. So a 3-for-1 forward stock split, or a 3-for-1 forward stock split a 4-for-1 stock split, or a 3-for-1 stock split by way of dividend will still give you 4 shares if you held 1 share at the start. And the way in which we were able to give effect to the stock split by way of dividend was to distribute 3 additional shares for each share that was held on the register, and we did that. The question for how brokers give effect to that is not something that we can answer, because we have no visibility or control over what happens within and behind the DTC and broker processes. The one thing I can say is the way in which these corporate actions are handled in the marketplace will really depend on what the value of the new shares that are being issued are. So if there is a stock split by way of dividend, and it's a small dividend, the shares would typically trade ex-dividend before the record date. In the cases that we've seen more recently, they were much more sizable distributions. One was a 3-for-1 distribution by way of dividend, which was a 4-for-1 stock split, and the other was a 1-for-1 dividend distribution, creating a brand new class of shares. And in those situations, the shares trade with the right up until the time the new securities are issued. So the market mechanism handles them slightly differently than if it was just a dividend, a small dividend distribution where they would go X before record date. So there are some differences in the market mechanics. How brokers and banks actually distribute this is really something that it's not something that we can comment on because we're not involved in that particular process. But it's clear there was a lot of online discussion about this, and rightly or wrongly, and I'm not sure, and you'll all tell me if I'm wrong, but it seemed to me the interest about what are the mechanics was mostly driven around, do the banks or brokers have the underlying shares on hand to attract the new distribution, and that's where it seemed to me people were really trying to really understand the micro mechanics of when something is split versus when something is distributed, and we really just don't have the information to answer that question for you. What we can do is say what we did as it related to all registered shareholders. In both cases, we distributed by way of dividend, even though we term it as a stock split. We distributed 3 new shares for one existing share in the GameStop situation, for example, and investor statements will show that, even though we still call it a stock split. So, that's a long and complex response to a long and complex question. I hope at least thematically you've got what you want from that, and happy to answer any follow-ups.
Well, I think part of the reason was that, we were trying to figure out how it's distributed in general, but then another part of it was that certain brokers were doing it as split and then dividend and then split, so like people were seeing their it come in as a split and then their shares taken away, and then it was a dividend and then taken away and then a split again. So, there was just a lot of
I don't understand it, and honestly, I can't speak for the brokers, and each of them are individual, but I'm very aware of the discussion that was taking place online, and it seemed to me the motivation was to really try and test whether the underlying shares were there to attract the dividend, whether it was split or distributed by way of dividend to existing shares.
Okay, so you guys are responsible for pretty much like sending the shares to the DTCC, and then they take care of the broker side?
Yeah, so we have 100% of the capital on the register. So you'll be aware of some of the charts that we have put out that are in the FAQ. So CD&Co is obviously a very, very large shareholder on our register, and then we have tens of thousands of individuals holding shares in their own names through DRS, and we distributed 3 new shares for each existing share in the case of GameStop, and I'll talk about that because it's just hard to talk theoretically with
right. Yeah.
still be very specific. So that's what we did. People who look at their statements will see that's in fact what we did. So we would credit CD&Co with 3 times the number of shares they held on the register at the time, just the same way that we would have done for every other shareholder. What then they do for the banks and brokers holding within the DTC system, and then what each bank and broker does within its own books and records is really down to them.
Okay. Well, that's good to know. If an executive is given shares as part of their compensation, are those shares normally held in DRS form?
They can be. It's really an issue for the executive to determine where she or he wants to hold their shares, or whether or not there's a clause in the program that says where they'll be issued. But there's certainly no reason why shares that are issued as a result of executive plans can't be held in DRS directly, or indeed they could be held indirectly through a bank or broker if that's what the individual prefers.
Is there like a default, or no? It's just their choice?
I don't think there's a default. I think it's their choice. It will probably depend on what their program is, but I don't think there's a default.
Okay. All right. Thank you. Knowing that the DTC can draw down shares that are owed to them according to the fast balance, can you specify instances where that happens?
Yeah, I mean, this is another question that we've seen. I mean, I've read so much stuff about fast in the context of what's going on, and honestly, I really don't understand what the discussion is all about. Fast is the arrangement that really governs how DTC's holding, so the CD & Co holding operates on our register, and it's really structured so that DTC doesn't have to receive a certificate for every deposit of shares into DTC, or give us as the transfer agent a certificate for every withdrawal that's coming out of their name to cover a DRS transfer. So it's very, very narrow and very, very specific to the CD & Co holding. But I mean, it just seems to be clear that it's causing a lot of confusion amongst investors, and you know, I don't really understand the motivations that go on as it relates to this particular topic.
Okay. Is there a policy regarding logging into our online Computershare account in order to keep it active?
So there isn't a policy. I mean, it's good. It's kind of good behavior, good hygiene to do that. Certainly periodically. I think the background to your question really relates more to escheatment laws, which relate to dormant accounts. So the US states have escheatment provisions in place that say if an account is inactive for a period of, let's say, 3 years, different states have different dormancy periods, and they also have different rules that relate to, you know, how you measure that, when was the last contact with the investor. So I'm just going to be quite general in comments here. So it is a good thing to do, to keep in touch with Computershare and your account. You don't have to do this on a daily basis or a weekly basis. An annual basis would be fine, but there seems to be obviously interest in interacting much more frequently than that. So, you know, voting your shares counts as contact, which is great. Things like, you know, if we were to mail something to an investor and it was returned by the post office, we would obviously flag that as, you know, a rejection. If that happened a couple of times, we would flag that in a particular way that would start the kind of no contact measurement, and then we would be required under law to escheat that to the state where the person resides, or in the case of an international investor, we would escheat that to the state where the company is incorporated. So, you know, roughly around a 3-year period is kind of the general timeline for dormant accounts.
Okay. Yeah, I think people are just worried that, you know, if they didn't log in for at least, you know, a year, that something could happen to their shares. So
yeah, it's obviously it's something which we're very conscious of. I mean, companies are sending proxies every year when they have their annual meeting. You know, a great way is to receive it online, vote your shares, and you know that's a great way to update last contact with Computershare. As and when we move into some of these tech solutions, like inquiring about your balance, you know, we would love that to count as last contact when you text us to confirm your balance, when that becomes available in Q1. I mean, one of the things we need to confirm is whether that will count as last contact under the rules and regulations within each of the states. So there'll be a little bit of work that will need to be done in the background. So from an investor servicing perspective, you know, texting will be a great way for you to feel comfortable that your assets are safe. As it relates to the longer term escheatment issues, we obviously want to ensure that some of those things can count as last contact.
okay. So say if I have the direct purchase plan where I'm automatically purchasing twice a month, does that count as a activity or no?
Yeah, that does count as
Oh, really?
activity. Yeah.
Nice. Okay, good to know. All right. Are there any plans for mobile app?
There are no plans at the moment to have an app. I mean, again, we've seen questions about when will we have an app. I think what we're looking to do is to develop a range of kind of microservices that we can offer through the web and through mobile phones, and we hope that that will be a good way to go. I wouldn't rule it out, but it's not top of our development list at the moment.
Okay. All right, so last few questions about IRA and brokers. DRS shares that do not have their cost basis information sent over by brokers are labeled as non-covered shares. Non-covered shares, by definition, are shares that are purchased pre-2011. Many shares, if not all, that are being DRSed are or purchased after 2011 and therefore should be covered. We have many cases of brokers sending over incorrect cost basis information. Are there regulations in place to make brokers send over the correct cost basis information?
So I think the answer to that is, look, as you rightly say, in most of these cases, the shares will be covered, and therefore the correct cost basis should pass with the transfer of shares. I mean, I don't know how frequently this is occurring, where brokers are reporting the wrong or incorrect cost basis. Where that is happening, I think it's really important that the investor speaks to their broker to ask them to update the cost basis with Computershare. That's important to do.
Okay, so they can just contact the broker and the broker will contact you?
Yeah.
Okay, good to know. Can you tell us some key things to look for when it comes to choosing a custodian for IRA shares? And are there any warning signs we should look out for when researching custodians?
I'd love to be able to answer that question, but it really feels like it's kind of verging on the financial advice area, which we can't.
Could you be general, like super general? Because a lot of people are kind of like trying to find custodians, but aren't really sure what to look for. So it's
So I maybe the place to start is, we can't take IRA registrations onto the register. Computershare is not an IRA service provider. All of your listeners know that. There's been lots of discussion about it. There's been lobbying about how do we get Computershare to do this, and we can't provide those services, at least as things currently stand there. And there are no plans. I don't want to start speculation there. There are no plans for Computershare to become an IRA service provider. But I think the discussion really needs to take place between the investor and the provider of the IRA account. There are really a few things that may be possible. One is the investor takes the shares out of the IRA and takes the shares directly onto the register. We understand that might trigger a tax event, so that's not attractive necessarily for the investor. But that's one way to do it. The second way to do it is to ask the custodian, the IRA provider, if the IRA provider would take the shares as the provider and put them into DRS form. That could happen. There's no prohibition. That's really an arrangement between the IRA provider and the investor. But there's certainly no prohibition against the IRA provider, that is the custodian, registering the shares directly through DRS and holding them on the register for the benefit of the IRA account holder. So that might be some information which people are not familiar with. Clearly, that will get down to whether the IRA provider is prepared to hold them in that particular form, but it can be done, and we do have accounts on our registers that are structured that way. So that's kind of a very general, 2-point response. As for which IRA providers are better than others, I'm sure there's a lot more online resources that can give much better responses as to who you should be looking for. But in terms of, as it relates to our services, maybe speak to the IRA provider to say, hey, why can't you provide it in the form of an IRA on the Computershare register without having to take them out of the IRA? And hopefully that's helpful.
Okay. Why can't trust accounts or LLC holdings be opened directly through Computershare?
This is these are all great questions. So I applaud you for, and I mean that sincerely, I applaud you for polling your community to try and get a feel for what are some of the key issues that are still on people's minds. I think there are two ways to respond to this. One is there isn't an impediment to being registered in that way. So that's the first issue. So you can have a trust on the register. The issue is the dealing services that we provide through investor centers don't operate for those types of accounts. So that might rule that out for most people that are in that situation. Excuse me, but there's no impediment to holding the shares, i.e. to be registered on the books of Computershare as a trust or as an LLC. You just can't sign up for the dealing services. So you would need to deal elsewhere. And that's partly to do with the fact that we always need to ensure that we've got appropriate authority for the person that's in charge of that particular account, so we know we're doing the right thing. So in the case of individual trusts or a trust, for an individual, we can in certain circumstances deal for that person. It may not be a web-based transaction, but where we've got a trust, for example, which has an EIN, an employee number, where the trust is a broader base acting for multiple people, it's just very hard for us to determine whether we're being properly authorized to transact. So that type of trust can be held on the register. We just don't deal for those particular parties, and they would need to find a broker to sell their shares or move their shares to a broker when they want to sell them. So hopefully that kind of separates out what qualifies as a good registration name versus who can use our dealing service as they're structured today.
What prevents trust account holders from being able to sell online?
So if the trust is a simple trust for an individual, it may be possible. If the trust is for multiple parties, the system is not set up to handle that type of transaction.
Okay. Can I register my IRA account or shares from my IRA account?
So if you withdraw your shares from your IRA account and hold them directly, you can do that. But we touched on that earlier. Your IRA account provider can, in the name of the IRA account service provider, can come onto the register as the custodian for you as the beneficiary of that IRA holder. But again, that's down to that party and you agreeing to do that.
Okay. Last question. If people have their shares direct registered in an IRA through a custodian, can the custodian reverse the DRS process?
Okay, so excuse me. So I'm going to try and answer that in two ways. The simple answer to the question is, if the custodian is the registered party on our records, it's the only party that can affect the transfer, or if it gives the DRS details to a broker, a broker can access those securities. But I seem to suspect your question was somehow connected with can custodians access accounts, and they can't. But
Okay.
if it gets back to, if the structure of the account is it's registered in the name of the custodian, it's the custodian that will always affect the transfer.
Okay. Yeah, good to know. And that's all we got. Those are all the questions today.
Okay.
So thank you for coming for the third time. Is there anything that you missed that you want the community to know about?
Well, thank you for having me on, Platt. I really appreciate the opportunity to participate in the AMA. I mean, the short message is we hear and really appreciate the feedback that we're getting from the investor community. I hope people will appreciate the fact that over the coming weeks, the Investor Centre will be upgraded to include the two-factor authentication process that people have been talking about over the last probably 12 months. So it's great to deliver on that. I think you've seen a number of other enhancements that we made over the last 12 months, and we're still working on things in the background, things like multi-factor authentication and digital onboarding. And I hope next year, we'll be able to talk about some of those things as well. So, continue to watch this space. We appreciate the dialogue, and I guess keep the questions coming. We appreciate the engagement with you all.
Thank you.
Thank you very much.